For decades, the path to a prosperous life was a settled equation. Get a degree, and you were handed a lifelong guarantee of financial security. For several generations, that equation held true. A university credential functioned as a reliable gatekeeper to the middle class. This chart tracks the total number of degree holders against the median wealth for that same demographic. While we have reached the highest levels of education in history, the median wealth for those degree holders has begun to trend in the opposite direction. To understand why this is happening, we must look at the difference between income and wealth. A degree is designed to help you earn a paycheck, but wealth is built through the assets you keep and grow. In a shifting economy, relying on the legacy equation without understanding the modern mechanics of market value can create an unexpected financial gap. We can see this gap clearly by tracking two 18-year-olds starting at the same point, the traditional credentialist and the modern skill builder. For the traditionalist, the first 4 years are defined by this red trench. While they are in the classroom, they are accumulating student loan debt, which places their net worth well below the zero line before they even enter the workforce. The skill builder spends those same 4 years entering the market immediately. By avoiding tuition costs and focusing on practical skills, they maintain a positive balance and generate income from day one. Because the skill builder has no debt to service, they can begin investing a portion of their earnings immediately. This activates the power of compounding interest years earlier than their peer. By the time both reach age 22, the traditionalist isn't just behind on income. They have missed a 4-year window of exponential growth that the skill builder has already claimed. At year 4, the traditionalist graduates and enters the job market. They are now looking for a salary premium to justify the time and cost of their degree. However, the supply of degrees has reached a point of oversaturation. When a credential becomes common, the premium that employers are willing to pay for it naturally declines. Meanwhile, the skill builder is no longer a beginner. They have 4 years of real-world experience and a track record of solving problems for actual clients or employers. In a competitive market, employers prioritize the ability to create value over the possession of a certificate. This creates a divergence in career choices. The traditionalist often finds that entry-level wages have not kept pace with the cost of debt, while the skill builder uses their proven competency to move directly into higher leverage roles. When credentials are plentiful, the ability to solve complex problems becomes the scarce resource that commands the highest market value. By year 10, the traditionalists' financial flexibility is often limited. A significant portion of their monthly income is committed to servicing the debt of the past, rather than building the assets of the future. Contrast this with the skill builder, who has used that decade to turn active earnings into systems, investments, and independent income streams. Navigating this modern reality requires a different approach. It starts by identifying where your specific interests meet a high demand in the market. Instead of a generalized curriculum, this path focuses on acquiring high-leverage skills through targeted, modern resources. These skills are then applied immediately. Building a portfolio of freelance work or small-scale projects creates an undeniable record of experience. This experience is then leveraged to create multiple sources of income, reducing the reliance on any single employer. Education is a powerful tool, but its value is determined by how intentionally it is used. Long-term wealth isn't the result of a certificate you hold, it's the result of the value you contribute to the world.